with the dollar, I don't know if you guys
I
watch
didn't
my.
understand.
Did you guys watch my analysis I posted on the dollar in the
Yes,
public group?
yes.
Yeah.
Yeah, so if you watch that analysis, you see that dollar is doing exactly what I outlined. Is it not, Yan?
Yes, it's exactly doing exactly what you.
So what I outlined is I want it to come up here. I want to see dollar come up here. Come up here before we now anticipate for a sell-off. That's what I want to see on the dollar. If we're going to see that bearishness on the dollar, it needs to come up here. We've seen a break of structure. We want to see a retest. A retest of what? Either the last
The fair
upclose
value
candle
gap.
or the fair value gap. Exactly. One of the two. Either this or this.
Okay, okay.
Because yeah, I can
Or
see
that
the run on
last
liquidity I was talking about as well on the DXY. Run on liquidity. I just on the side. Then the the movement that creates this run on liquidity, you want to see a broker structure on it, retracement, and even the retracement, I will see another inner run on liquidity, and this will be on the fair value gap. Then you could take the trade to go lower.
Yeah, exactly. For me to take this trade, I'm not going to just set a limit order here and expect this to go lower. I'll still wait for a smaller time frame break of structure right here. It could be a 30 minutes or 50 minutes break of structure to the downside from here. If I see that, then I'll look for a trade. But if I don't see that, I'll be on the sidelines because like it or not, price can still continue higher and run this high. Because if you go to this monthly time frame, you can see that this monthly time frame here, monthly time frame is still showing you higher highs. It's still showing you higher highs. So price can still decide to continue higher. But on the other hand, I like how this is. I like how this is actually aligning. So this is January candle, and this month ends in 1 day. I like how price is intentionally delaying so that if we're going to sell off, it's not going to be from this candle, it will be from the next candle. Now, remember what I told you guys today. What did I tell you guys at the beginning of this session? What did I talk about?
The consequent encroachment.
Exactly, consequent encroachment. And right here, we have the wicks. You can still mark the wicks, the 50%, and watch and see whether price will come. If price comes into that 50% and you see a displacement to the downside, sell massively. This is monthly. This is a monthly candle. This is a monthly candle. Price mitigating the monthly consequent encroachment and breaking structure to the downside. That is high probability. So you can literally mark that consequent encroachment and go to the 50% and see whether there's a fair value gap resting around that area. Even though this dollar chart looks a bit rubbish, to be honest, because of all these gaps. There's just too many gaps everywhere. Too many gaps. But as you can see, we have this fair value gap that we had there on the daily time frame. So on the daily time frame, we have this fair value gap here, even though the fair value gap is not at that consequent encroachment, but we still have a fair value gap right there. So the moment you are above here, anything from this 50% lower is a key level for me to be looking out for. Price can still want to come here and take liquidity from here and tap the 50%. Any of them can happen. No matter how deep we go into, I don't care. If I see a break of structure to the downside, anywhere inside this red zone, I'll be looking for sell opportunities. And the opposite goes to euro and the pound. Now, for the euro, what I'll be looking out to see is right here. This is what I'm looking out for euro, here and here. I personally would prefer for euro to come down here, in my opinion. This is where I'll prefer to see euro come down.